Hello, my dear friends. This is Chinmay Hegde, your learning partner. Welcome to Day 7. Let's learn SFM practically. Disclaimer: this video is for education purpose only. Do your own analysis before investing. Four components in every day. Let's start with the first one. Quote of the day: risk comes from not knowing what you are doing. It is said risk management is very important in stock market. And how does risk arise? The basic fundamental aspect, as per the great Warren Buffett, comes from knowing what you're doing. That is good. But if you don't know what you're doing, you blindly do it, that is risk. That's why for many people, stock market looks like gambling because you don't know what you're doing. Terms of the day. I will continue with what I have discussed yesterday, that is going with options. Let me give example of Reliance Industries. That's what I got as the answer in the poll which I conducted in my Telegram channel. So let's go to the website and look at the Reliance Industries and we'll take as an example. So I'll just go to internet. Then I'll come back, of course. Yes. So I'll go to NSE India, the most popular website, authoritative website. Let's go to Reliance Industries. Don't take any other Reliance. Reliance Industries. The stock is around 1983. It had a good rally yesterday. I will go to the derivative segment. And in derivative segment, I will select stock options, and expiry dates are basically 3 months. I told you current month, next month, subsequent month. Let me take the current month, that is next Thursday, 27th May. Option type, I'll take call, and strike price. You see, the strike price is where you're taking the bet. You're taking a position. I should not say bet. You're taking a view. That's a better terminology. Let's say I will select 2000. And you see, strike price 2000, expiry date 27th May, and the close price is 29.45. Okay, so with that data, let me explain what is this. I hope you are able to see these numbers. I'll just increase the size a little bit maybe. Yeah, anyway, I'll try to explain. So you are betting, you are having a bet on, okay, I should not say bet, you are having a view that the Infosys share price will go beyond 2000. Remember, current price is 1993. And for that, you are paying a premium, being a holder of 29.45. So if Infosys share price is 1995, it's not crossing 2000. That means whatever you paid 29.45 is gone, is lost. In fact, you can't buy one options, you have to buy in lots, and the lot or value of Reliance is 250 lots, one lot, one trade, and 30 rupees if you pay, that is almost 7,500 rupees. And if in a week's time, if it does not cross 2000, gone, entire 7,500 gone. What about the writer position? He is taking a view the stock price will not go beyond 2000. Remember, he is not telling it will fall below 2000. His writer is just taking a position, it will not go beyond 2000. Holder is taking a position, it will be above 2000. So writer is not telling below 2000, he is telling it will not be above 2000. So if the holder view comes right, then he will get the money. If the writer views comes right, he will get the money. And how much each person gets, that is a very interesting point. As I told you, if it is 2000 or below, any amount below does not matter. What the holder lose is 30 rupees, 29.45 rounding out to 30 rupees. And writer what he gains is 30 rupees. But if the stocks, let's say, goes to 2,100 rupees, sir, 5% in a week, very unlikely. That's the bet you're taking. That's the position you're taking. Suppose it goes to 2,100. Now the holder will get 100 rupees, 2,000 to 2,100. So you are getting 100 rupees extra. And how much you already paid? 30 rupees, approximately 70 rupees your gain and 70 rupees the loss for the writer. So that is what is payoff for the holder, payoff for the writer. So sir, isn't it? It's very amazing that holder, he has a limited risk. His maximum loss is 30 rupees and he has the unlimited profit because the 2000, the 2500, how much ever goes, for every 1 rupee high, the holder gets more money. Isn't it holder is better? No. Should not think that way. And that is the main reason many people lose money in options trading. Thinking that I have limited risk and I have unlimited profit, that I can make easy money. This is how the lottery mindset will think. What is the lottery mindset? I have a limited amount. How much? One lottery ticket, let's say 20 rupees, like 30 rupees here. I can get to even 1 lakh. I can get to 2 lakh. So I have limited profit, limited loss, unlimited profit. So if you think the options like a lottery trading, I'm sure you're going to lose. And that's why many people lose in stock market, especially in option trading. So what you're not looking at is, look at this. 2000 is the strike price. And if the holder has to make money, it has to go beyond 2000 and not just 2000. It has to cross 30 rupees also, 29.45 rupees also. Why? That is your cost. You have to recover your cost also. So for you, for a holder to make profits, it should be 2000 plus 29.45, approximately 2030 or above. Approximately 2030 or above. What is its probability? Currently, the stock is trading at 1993. Will it cross 2030 or above in a week's time? I'm confident, sir. Yes, sir. Then you become a holder. No, I'm not confident. It will not cross 2030. You become a writer. And more often than not, stock market moves in sideways. That means it will not go up drastically. It will not come down drastically. That is why most of the times writer makes the profit. So then strike price is 2000. I need not take a position only on 2000. I take a position on 1900 also. Let's see what happens. 1900, look at the close price, 106.75. This is called as in the money option. 1900 is the strike price. The cost of you, let's say 110 rupees. So it should be 1900 plus 110, 2010 rupees. Now 1993. Will it cross 2010 in a week's time? More probability is there. So you should become a holder in this strike price. Anyway, so in general we say the holder will have a limited loss, unlimited profitability, but probability is not in the favor of holder. The writer has got unlimited loss possibility and limited profit possibility, but the probability, the chances are on the writer side. Of course, the writer take more risk and the chances are more in his favor. And you can take the positions in various types of options, various types of strike prices. So 2000, now currently the Reliance is trading at 1993. So if you take it around 1993, let's say 2000, that is called as in the money option. If I take below 2000, that is called as, when I take the position at 2000, very close to the spot price, that's called as at the money option. And when I take it below 2000, that is called as in the money option. And if I take it beyond the 2000, above the spot price, that is called as out the money option. And the probabilities are out the money options will have a lower probability for the holder point of view and lesser probability and higher probability in the money options. And these are all the discussions applicable to call option. Put option will be applicable in a reverse manner. So basically, call option holder is having a view that the price will go up and he gets the money only when the price goes beyond his strike price, what is agreed, plus the premium, the price of the option. And the writer will be moving in the opposite manner. Okay, so this is discussion for the day. I mean, the terms for the day. Let us come back to the market assessment, what happened yesterday, and what we are going to do today. Okay, so going forward, so what happened yesterday? Remember, we predicted, I should not use the word predicted, we estimated that 15,020 will be the price and the market closed at 15,020, but in fact, because of the close price is last half an hour weighted average, it became 15,030. I am not a god, I not a genius, I don't get the credit as I know something about the market. No, I get something right, I get something wrong. But when you do proper research and analysis and understand, two things are required. You have to understand, also you have to spend the time every day tracking various news. You will be in a better chance to closer to the market. That's all. Nobody can beat the market, nobody can be above the market. So yesterday my assessment was close to the market. I don't claim that every day. Yesterday it happens, and if you do your work properly, I'm sure you will also be able to do like this, if not every day, at least once in a while. What happened yesterday? Indian market showing weakness. So after a continuous rally for the past 2 days, market is consolidating, market is down little bit, not drastically, and that is the nature of a market. When something goes faster, it needs to consolidate, it needs to stabilize. And the news of the day yesterday was crashing of cryptocurrency, especially as a result to the news given by the action taken by China regarding the cryptocurrencies was not favorable to them. They are banning something. So cryptocurrency crashed. As a result, US market was also down, but later in the day it recovered. We look at the charts. And in Indian market, FII and DII both sold. Both were sellers. So both were having a negative view. So let's look at the chart and we'll give our assessment for the day what could happen. So let me go back to the internet. And let me go to the Dow Jones index. You see what happened yesterday. It fell drastically, especially on the news of the cryptocurrency. C for crypto, C for China, C for corona, everywhere C only. Anyway, so it came down, and even my name is also C. It came down drastically, then it recovered. So Dow Jones is on a negative side, but on the recovery mode, and it's down for last 3-4 days. That's a reasonable point to worry. Let's look at one more, the index, Nasdaq index. That is also started on a low point, then you see there is a gradual increase. Let's look at our stock, what happened in Nifty 50. It opened on a slightly positive mode. Okay, it's positive. Actually, I was expecting to go down. Anyway, it started on a positive note. Okay, this is what last 5 days things will look like. It went up like anything. You see that boom in last 2 days back, Monday, Tuesday, and then it stabilized. And it went down little bit towards the end yesterday. If you look at the chart little bit detailedly, I'm just going to Zerodha account and showing it to you with the candlestick chart. It is showing, it is downwards trend. It has increased, no doubt. And you know, market will not go in a linear scale. It has to stabilize before it takes the next leap, before it start moving upwards. So you can see it is range bound. It is not moving too fast, neither downside nor upside. And you see some kind of support was there. This was 15,020 I was telling yesterday. So I think if it falling down, but market looks like it's going up, but if it comes down, it will come down to 14,900 or 920, 950, around that range. Okay, so what is my assessment? Let me try to come back to PPT and show it to you. Local cues are actually positive. Global cues are definitely negative. Chart analysis, in my opinion, it is again negative. It is down for last few days. In my take, it is negative. Market has opened up on a positive note today. I know, my dear friends, but I am assessing today market will fall down. I mean, not drastically. So it's starting from around 15,020 or 15,030, right? It's starting at that point. In my opinion, it will fall down around at the end of the day. It might move volatile during the day around 14,950, 900, 950. Let's take it as 950 because uh, today is also expiry day, and during expiry, the market will be volatile, and on a volatile, most of the cases, market price will fall down. Because the US market recovered yesterday, Indian market also is trying to go up. But when the US market opens, when the European market opens around 1:30 Indian time, where FIs are already selling, cryptocurrency crashed, negative mode, Indian market is already moved up. In my opinion, today it is going down. Only for today's expectation. I may be true, I may not be true, I have every right to be wrong. So you do your analysis as I told you at the beginning. But my take for today, considering all these events, it is going to be negative. Let's see what will happen tomorrow, whether this expectation is uh, right or not. Yeah, C for C here also correct. IT sector will supportive. Yes, looks like Nasdaq is on a slightly positive mode, but that's how my observation in my experience so far. Yesterday it went down on a negative note. US market was also down, and Indian market started on a positive note. So when people know things are negative, and the moment you see market going up, usually people's psychology says, let me book profits. It starts positive, giving opportunity for people to sell, and the moment people start selling, the market will fall down. I may be wrong as I told you, but market is uncertain doesn't mean you should not take your view. If you don't take a view, you will never succeed in stock market. Taking a view is very, very essential. Okay, so and also today is expiry, and on expiry date usually market will end negative. That is the sentimental aspect. That's what I've observed. Okay, so that is what my assessment for the day. I hope you are able to get some insights into what is happening in the market, and I'm hoping you will be able to do these things on your own also in the coming days. So that's it for today. Happy investing and have more learning. We'll see you tomorrow at the same time. Till then, take care. See you. Bye bye.